look at international stocks, one of the most important things to talk about, I think first and foremost, is currency. So because we had such a large backup in US rates in such a compressed period of time, what you really saw was a very large move in the US dollar against every major currency around the world. So, so international stocks generally don't look like they perform particularly well relative to the dollar. That being said, actually markets are up post all these declining currencies, but currencies have had a sort of a very large impact in a very short period of time, which is the fourth quarter. By far, the best performing sector this quarter were financials, without question. They're up 10% while the benchmark is really down. So it really has an overwhelming impact. We take a very wide view of growth and we group it into three different buckets. So we have an emerging bucket, which is the very high sort of accelerated growth. We have secular growth, which is very long-term, thematic in nature, and then we have structural, where we think there is mispriced opportunities. We had been quite concerned about some sectors like pharmaceuticals, where the secular backdrop had been very good for an extended period of time. Volumes were good, pricing was good, but valuation of these stocks was starting to get very high. So we took the opportunity in the beginning of this year to take down our sector overweight in healthcare pretty dramatically. So within our structural bucket, again, where we feel that earnings are mispriced, we've added two new names in the portfolio this year, one of which is Canadian Pacific, which is a large Canadian rail company, also has large business in the US, and also iron ore producer Vale in Brazil. Both of those stocks, we think the equity is significantly mispriced, and we think that earnings growth is significantly misunderstood by the market today. The drags to the macroeconomic situation in Europe has really been improving, and we really see things stabilizing there. When we look at financials, again, that market has a large component of financials, and the backup in rates has been good for European financials, and this should be positive as well. And certainly we think that multiples are not particularly extended. With the backup in US rates, we've seen the Japanese yen fall relatively significantly, and that will help earnings from the Japanese corporates as well. Selectively in emerging markets, we are interested in certain economies, although we are cautious about a very strong dollar and what that could mean for emerging markets. We're pretty bullish on what's happening in Canada. Again, they have a new prime minister who's very pro-growth, and we think that should do well for that market, and there's quite an interesting selection of names there.